In this video, we're going to talk about the actual criteria for pulling the trigger on this opening drive trade. Stay tuned. Hey guys, a very warm welcome to you. Welcome back. So we are part 4, I believe, of the opening drive trade setup. We talked about, very quick overview, we talked about how we can kind of put filters in place to make an assumption whether the opening drive is going to happen, whether it's not going to happen, and little things that we look at to say, hey, overnight session's been good, gap's been good, we've seen some action the first few minutes. What now is the criteria? And this is what I moved over to the text file when I overlaid it onto the chart. Initial reaction, what's happening, give it a few minutes, let it digest, and let's see. We've already said it with our example that it looked great, we've had a good drive, a decent overnight range, all the things have fallen into place for it. So after we have confirmed the momentum, after we said, yes, you know what, game on, we are ready to pull the trigger, what do we need to see? We need to see a good drive, we need to see a pause, and then we need to see an execution. So in other words, we want to see the drive, and then we want to see a pause. We don't want to see it just shooting off into the distance. That's no good. We need to see the drive, the pause, the flag, as we saw in the chart, and as you can see on this kind of small, if I can, maybe I'll zoom in a little bit and we can see wherever I've pulled this example from somewhere, same kind of thing. You know, drive, pause, and anything that you use to get into a flag. So you're buying that kind of fake out to the downside of the flag, you're buying a break of the upper end of the flag, you've got a moving average catching up to it. You know, we don't need to go into details about how we're buying flags in this kind of video, but that's what you're looking for ultimately. It's the pause, and then you're looking to execute the trade. Now, one thing to add is that real momentum will usually offer you 2 or 3 opportunities to enter. I'm gonna say be careful of the third one, but let's just run through them anyway. So the first one is the brief pause. So in other words, we have the drive. Can I draw over the drawing pin here? Let's have a look here and see. I might have to go back to the chart in a second, but we have the drive where we push up and, you know, we get that consolidation. We get that little tiny pause. And this is the kind of thing that we're looking for. And if I just pull out a little tiny thing here, we've got, you know, a drive up here, we have the good drive, and we get a little pause, it's a little tiny pullback, not much, just a little pause, a little flag, a little kind of digestion, and then we get a continuation, then it goes on again. That's kind of what we're looking for. We're looking for that brief pause. That's number one, and then we get, you know, that's the meat of the move that we're looking to trade. That's what we're trying to get on, that first kind of pause. And then, you know, often we'll get a pullback, a deeper pullback, or a consolidation. And again, you know, something more deeper. Maybe it's a longer term, takes a long time, more time than the initial kind of pause. So the drive, pause, then you get a bigger pullback, perhaps to like a 20 period moving average or something on a 1 minute, that then goes to highs. And the third is a longer counter trend cycle. That's really a different trade. That happens generally kind of midday. But what we're really looking for is this big one at the beginning, this kind of area here where we just get, I've covered it up now, but this area here where, you know, we get really that, and just the briefest of pauses that's going to give us the biggest juice, the biggest bang for our buck. We've done all the analysis we need to do, we've put our filters in place, we know that this is happening, we've seen it drive, we see the flag happening, we see the brief pause, we pull the trigger, and we want to get involved in it. We want to be on board it because we know that the odds are on our side because of all the layers of edge that have stacked up. So the big thing is, where do we put our stops? Where do we put our stops? How do we manage the risk on this? The number one thing is, listen, we've got to give it some room for entry if your entry is suboptimal. So I know that we're trading momentum here, and we've got a little bit of a tendency to perhaps chase it. So maybe it pulls back a bit and we're a little bit early on it. We need to give ourselves a little bit of room because the probability is really on our side with this one. Obviously, we don't want it coming all the way back on us, but we need to give it a little bit of room. So in other words, I try to frame it like this. Split it into threes, guys. The range of the drive, split it into threes. So 30%, 30%, or 33, you know, 3/3. If we're still pulling back within the top 30%, I think it's still valid. I think the momentum is still valid. Any more than that, you know, it's not for me. So we've already seen all the parameters and stuff. We now see the drive, pulls back. As long as it's in the top third still, I'm still up for it. It starts encroaching into the second third. Yeah, no, I'm not so keen. I want to see real good momentum drive, consolidating in the top third, and then I want to take it. I want to see a continuation. Stops wise, if we're doing a flag entry, we want to put a stop under the flag wick low. So if we have that kind of wick that we often get at the bottom of flags, the stop goes underneath that. If it's a proper pullback, i.e. it's chugging along, then like a trend line type entry, then we want to put a stop under the low of the pullback as it breaks above the high. And if it's a really deeper pullback, we might have to kind of use a wider stop and perhaps use it in the lower half of the, or maybe 50% or maybe 60% of the retracement of the drive. But these are kind of getting a little bit more flaky as we go on. We really want to see that high tight flag. That's the very, very best thing. And the thing is with this, guys, is that we don't want to be caught out in something that is going to be a mean reversion trade. In other words, if it looks like it's not working, cut it. If it's genuine momentum and we're buying this opening drive trade, trading momentum, we can buy a breakout. If we want to, we can buy a break of the high, the pullback, the flag. We don't even have to get fancy with it. We can just buy that breakout, have a stop below that low, and trade it from that. Very simplistic. I think we can fine tune it. You know, a bit more skill, we can fine tune it. But if you want to do that, then that's perfectly acceptable. I think that works just as well. So don't be afraid to kind of cut it, because the last thing you want to do is to be so convinced it's going to work because all your parameters are kind of lining up, but then actually, you know, when you do it, you get caught in a mean reversion. So you really don't want to do that. And targets, this is where we want to dig into it a little bit more, and we say, hey, if we're using the tick index, nice extremes on that, so plus 1,000, plus 1,200 if we're trading a drive to the upside. Our expected 15, 30 and 60 minute ranges at the open, you know, if we're trading something very specifically like a DAX or Dow, we should have a log of the most frequent, the most common, or the mode occurrence of the range. So is it 50 ticks in the first 15 minutes? Is it 60? Is it 100? What is it? What's the largest we've had in the past 2 weeks? That kind of info, so that we know, hey, you know, we often have kind of 60 tick ranges in the first 15 minutes. We've already done 60. Am I pushing my luck here now buying this because we've still got kind of 15 minutes left of the opening hour and we're already at an extreme? You know, do I want to dial that in and rein that in a little bit? So looking at the expected ranges for this, for the generally speaking, key levels as well. You know, are we coming to a massive resistance level from multiple days ago? Want to be cautious of that. Need to be careful that we're not you know, chasing something that's already stretched and again that's coming up to resistance, and being a bit cautious on that. Daily average true range, bearing in mind that if we're trading this on the first hour, generally the first hour, more or less, is a really heavy trend day, will give us a big range, so we don't want to be going too far over the average daily range. On the other thing, guys, is that, listen, the targets is by the way, targets, what I mean by targets, I'm saying expected ranges, we use that as a target. So if we're in, say the average range for the first 15 minutes for the past 2 weeks is 100 ticks, and we're getting in and we've done 60 ticks, we hold for another 40. Okay, we hold for that expected target and we close it at that. We close it at a tick extreme. We close it at a key level. So while we use it as caution, we also use it as target as well. If it's coming up and tagged at a key level as resistance, we click the trader. Daily ACR, if we're hitting the daily range within the first hour, a good place to take profits. And then again, a daily chart, look, if the level looks good and we've broken out the key level and we're above all the levels and we've got fresh air above us, why not hold, get on, grab this meat and momentum in the first kind of 15, 20, 30, half an hour, and hold until the close, and then reassess in the close. Go away. It's a perfect time to kind of potentially get onto a trend day, put your stops in, leave it, and see if actually when you come back you've been stopped out, fine, or you've got on the end of a multi-100 point move and potentially it's going to follow through to the next day. But just the caveat there is, listen, an opening drive doesn't always lead to a trend day. Very often we get a drive then reverses, but it can do. So again, perhaps using that edge as an edge to get in for a swing trade for a longer term. Alright guys, hope you enjoyed the video. Comments below if you'd like to give it a thumbs up, and don't forget to subscribe for more videos from me and other traders on this channel. Take care guys, speak to you soon, bye bye.